Oh, our system in the UK is rather considerably gold-plated. Our government traditionally has gold-plated European directives. They fight tooth and nail against them while they're being negotiated, and then they implement them considerably more rigorously than nearly everybody else in Europe. It just seems to be the way we are. The government are trying to stop us doing it now, but there is a lot of gold plating within the money laundering legislation that they're not going to take away now. It is only a suspicion reporting regime. There isn't any overseas transaction reporting requirement as there is in Australia. So that's at least one thing that's a bit less fierce. All crimes, any criminal offence, no de minimis. I'm going to talk about these later, as some of them have had to be modified to stop the whole regime being brought into disrepute. Passive laundering, the possession of the proceeds of your own crime. Lots of people's money laundering definitions require that have been an effort to conceal the proceeds. If an accountant in practice forms a suspicion and doesn't report it, that in itself is a criminal offence. I don't know of any prosecutions, but the threat is there. Strong enforcement, all, not only professional accountants, but accounting technicians and bookkeepers with a practice and unqualified accountants are all within a requirement to be regulated since 2007, and so hence we regulate our member firms for their anti-money laundering compliance, and all functions of practicing accountants. Well, all accountancy functions, accounts preparation, bookkeeping, tax returns, everything. Advisory services on preparation of accounts and accounting matters.
Have there been any disciplinary matters involving money laundering non-compliance?
Yes. Yes. Where people worry about professional bodies these days, they worry that because we are a single body, we might be soft on our own members. There was a lot of rude comments made a couple of decades ago in our Parliament about chaps regulating chaps. And so the Institute does divide its functions quite a lot. So I don't hear about disciplinary cases. And I expect I ought to follow them when they make it to the public record and get published, but I tend to be too busy to notice. And so I can't tell you that much about how many disciplinary cases there have been. But usually we find that I don't think it has been easiest for us to find cases where we know the accountant has been culpable. Though we've found a lot of cases where they have been lazy, naive, or stupid. And so it seems to us that the appropriate action for that is arm twisting and education. And so there's an awful lot of that.
So on that last stop point, does that also include if they're performing a function such as business consulting or auditing?
We're being careful in our definition. It definitely includes auditing. Business consulting. If it's consulting on financial matters, that is the preparation of reports and accounts, the setting up of accounting systems or systems of internal control, yes. If it's consulting on a matter that you wouldn't think of as being accountancy at all, then no. If one of our member firms set up a department which was dealing with a state agent, no, not a state agency, that's a bad example, employment agency, then that would probably be out scope. Now, one of the things I told Austrac is, or one of the things I asked Austrac is, why on earth are you thinking about regulating accounting firms for anti-money laundering regulation when you've got some very good authoritative professional bodies for accountants in Australia who already visit their member firms to try and make sure that they carry out their professional work appropriately, and it's not a big step for them also to review their AML compliance. Unless Austrac is willing to spend a lot of money on it, the professional firms will probably visit their member firms. The professional associations will visit their member firms more frequently as well, and they may recognise non-compliant behaviour more easily because of their knowledge of accountants and how they practice. The systems requirement, the fact that everybody has to be trained, has raised a lot of awareness of the value of this regime as well and why it's all being done. And it's had the effect that accountants in the UK, accounting practices, make over 6,000 suspicion reports a year. Now, I don't know of any other jurisdiction that gets even closer to that. The largest number of suspicion reports from accountants in a single jurisdiction that I know of is the Netherlands, which make about 150 a year. So all that gold plating, I think, probably does produce a lot of useful intelligence. I don't know how much of it, because it's been very difficult in ways that I understand to get useful feedback out of RFIU, that's SOCA, the Serious Organised Crime Agency. In about a third to a half of those reports are reports of tax evasion. So they go straight to the tax authority that has a quick look at them and passes them to the appropriate tax inspector, who will either already have an investigation in place or will review it with a view to making an investigation. The rest are all sorts of random suspicions, usually on the basis of a pattern of business. A client is doing something that can't be explained by his business model. He doesn't seem to be doing stuff which is carrying out business with a view to making a profit.
Sorry, do you also have any figures on how many of those reports result in prosecutions?
No. Suspicion reports. We try and get our members to include every bit of information that might be useful to a criminal intelligence, a criminal investigation. So this includes not only passport and driving license numbers, national insurance numbers, mobile phone numbers, email addresses, and so on. Now, a serious organised criminal may have a number of aliases. He's quite likely to have more than one fraudulent passport, but may only have one mobile phone. Makes it easier to manage a criminal network if all your operatives know how they can contact you. So if one of my members makes a suspicion report, which includes a fraudulent passport number and an accurate mobile phone number, a criminal investigator searching on the database may well be able to make a connection and find an additional alias of his target. So it can be a useful bit of data, but a small one, which is only one aspect of a major criminal investigation. So that we've been told that sometimes there are investigations where as many as 5,000 suspicion reports are germane to that inquiry. So you bundle them all into the pot and stir it up, come out with not just intelligence but evidence, prosecute and convict. Having done that, as a police force, you get out around with your friends to the bar and generally be congratulatory, but it would be awfully difficult to continue with the motivation to go back and say thank you to each of those SARS contributors individually. So soccer itself doesn't know all the use that has been made of the SARS on its database, let alone being able to tell the regulated sector. This is a shame. And they are under inquiry. They're under pressure to give as much feedback as they can, notwithstanding the fact that it is difficult for them. So we know they try, but we try to explain to our member firms why it's difficult and why they shouldn't assume, just because they haven't had specific feedback, that it doesn't mean that their suspicion report hasn't been useful.
It must be a challenge to get that message out to firms, because if firms can't see the connection, there must be less motivation to continue.
Yes, and it is expensive for accountancy practices. It's a demanding regime. The costs are high in the UK, and we did some research a few years on costs, benefits, and the perceptions of the regulated sector into the AML regime. And one of the conclusions that came out was those firms that made a judgment that the costs were too high were the same firms that made a judgment that the regime was ineffective. So it goes together, persuading people that it is useful with persuading people that the costs are worthwhile.
Just ask if you have a sense of how many practices would decide to stay outside the regime and just not comply. Perhaps those.
Next time you come to London, remind me to introduce you to some of our practice regulation people, because they'd be a better people to ask than me. Actually, my impression of our member firms is actually biased, because the ones I meet are the ones who come to training courses. And if you want to ignore the whole thing, you don't come to training courses. But it's the same with accountants that I've met in private life. They have a tendency to be grey-suited. I'm reluctant to say boring, because I haven't actually found them boring, but absolutely stuffed full of integrity. Their business model is, come to us and we will help you comply with the law. We will keep, as far as we can, the tax authorities and other meddling public servants off your back, but we can only do that if you are honest with us. And that's pretty consistent with this regime.